What is this? According to Zero Hedge, what is this? The madness is back. Homeowners take out mortgages to buy Bitcoin, cars, and wine. Yeah, that's absurd. However, there's only one good there's only one good decision that those homeowners made out of those three choices. Take a guess which one it is. I'll run them by you again. Bitcoin, cars, and wine. Which one was the best choice they ever made in their life to use that new mortgage money they got? Bitcoin. It's been a decade since the term mortgage arbitrage made headlines, but it's back. In the clearest sign yet of just how far the investing cycle in the developed world finds itself, Financial Times writes that wealthy British homeowners are again borrowing against their property to invest in bonds, equities, alternative investments, or commercial property, as the low cost of debt creates opportunities for mortgage arbitrage. And while taking out a mortgage to invest in safer ARBs like corporate bonds, commercial real estate, or private equity would be at least understandable, if not excusable, in the current low yield regime, some more extreme investment decisions suggest that the madness and euphoria that marked the peak of the last asset bubble is in fact back. Because while growing numbers are prepared to risk using their primary residence as collateral, some are ready to gamble on extremely volatile assets like Bitcoin, wine, and cars. One broker said a mortgage-free homeowner with a house valued at $10 million or euros had taken out a fixed-rate loan of just under $2 million to buy Bitcoin, the cryptocurrency that has seen huge volatility in recent months. Others have invested in classic cars or fine wine. One former banker took out a $500,000 mortgage, not for investment purposes, but to provide a fund for routine spending and other eventualities. Figured it'd be, a banker, One broker, was that it? Former banker, yeah, okay. To be sure, while these are extreme, and for now rare, examples of investor euphoria, even the more mundane mortgage arbitrageurs are willing to take major gambles. Interest rates of less than 2% on 2 and 5 year fixed rate home loans are tempting high income, mortgage free homeowners to raise money against their property in the hope that they can profit from higher rates of return elsewhere. Again, this guy, $10 million home valued at, right, takes out $2 million or 20% to play this Bitcoin game. I'm here to tell you that they will easily pay back that $2 million investment in a hurry. And if they had $10 million, owed on the house, and they were able to get $2 million elsewhere, they'd be able to pay that house off too. Trust me. Bitcoin is going to double, triple, quadruple. It's going down. Cliff, I already told you about this. I've been screaming about this for months. It is going to happen. Speaking of which, while I'm sitting here talking about this, go to my handy dandy website I always look at, TradingView. Bitcoin, same price roughly as it was yesterday, 32.63. Ethereum has inched up now even further than the high 250s and 260s. Like I was talking yesterday, it was like 261 or something, 258 on Coinbase. Now it's 265 on Coinbase and 268, 267 on Kraken. So it's also inching back up as well. Same with Litecoin, $42, 43, now $45. Anyways, Simon Gammon, director at mortgage broker Knight Frank Finance, said the arbitrage had emerged as a trend among financially sophisticated clients as mortgage rates fell. We're a specialist lender at the top end, but we're seeing up to a dozen of these deals a month, he said. This is something that has come about because of the current environment of low interest rates. How prevalent is this behavior, which peaked during the last housing and credit bubble? Mark Patenchetti, A mortgage manager at broker largemortgageloans.com said the number of borrowers taking out loans to fund investments has risen by about 50% since 2009. Borrowers have realized the cost of debt is cheap, and it isn't going to get much cheaper, he said. Unfortunately, what borrowers are forgetting is that home prices can drop as mortgage rates rise, while risk assets, impossible as it may sound, can correct sharply, hitting borrowers with the double whammy of rising LTVs as inbound margin calls force them to liquidate into a single market. Ironically, anecdotal evidence suggests that this troubling behavior has been prompted to be declining UK home prices. Until recently, one of the best performing British assets. This has been the result of Brexit-related concerns, a decline in Chinese and other foreign investors rushing off after UK real estate, as well as concerns that the Bank of England will soon raise rates, resulting in increasingly more for sale signs. As the Financial Times notes, for debt-free homeowners, remortgaging during the years of booming house prices was often a means of raising cash to carry out home improvements or expand a buy-to-let portfolio, but slowing house price growth and a regulatory and tax crackdown on landlords have made these options less attractive. Hugh Wade Jones, Group Manager Director of mortgage broker Ennis, said, "It's accepted that property is no longer going to be the all-conquering investment, doubling every 10 years, so people are looking elsewhere for returns." They're looking elsewhere. Like these cryptos, Bitcoin, Litecoin, Ethereum, and the tokens, Veritasium, Populus, etc., the rest of them. In addition to Bitcoin, cars, and wine, borrowers with housing equity are putting money into everything from bonds and private equity and commercial property, brokers told the Financial Times. David Adams, managing director of John Taylor, a Mayfair-based estate agent, said investors were borrowing against London residential properties to fund investments in commercial and mixed-use developments from Southampton to Birmingham at returns of 6 to 7%. Wealthy investors are no longer chasing capital gain. There is a switch to yield. In other words, they want interest rates. We need the interest rates. According to Knight Frank Gammon, the practice typically appealed to those with investment experience. People who have not needed to borrow have looked at the rates available, and we've now got 5-year fixed rates from 1.65% and said if I can make 1.65% or more of my money, then I don't know what I'm doing. Unfortunately, should home prices in the near future tumble while risk assets slide, crushing the so-called experienced investors, that's exactly what one can conclude, making it easier for the smart investors to bury themselves with margin calls. There are no regulations prohibiting this kind of behavior. There is nothing in the mortgage regulation to prevent someone raising a loan on a mortgage-free property for personal investments, as long as the lender assesses that the loan is affordable and not being used, for instance, to prop up a business generating income for its repayment. Lenders, however, may choose to apply criteria that restrict the use of capital raised through a mortgage, although private banks are typically more relaxed about non-property investments than high street banks. For bigger mortgages, lenders will also moderate risk by insisting the size of the loan does not exceed 60% of the property's value. So again, you got a $500,000 house. It's paid for, but you can only get 60% loan out of mortgage out of it for whatever purposes you wanted. Okay, so that's close to $300,000, $280 something, whatever. Could you imagine putting $280,000 into Bitcoin just earlier this year when it was around 1,000? When it was around 1,000, now 3,200. So your 250 or 280 doubles and basically triples. 280 times 3, have a nice day. Cha-ching. So even if their property gets destroyed, values go down. Doesn't matter if they were in Bitcoin. However, this whole article isn't about people just in Bitcoin. This article is about people taking mortgages out on all kinds of different stuff. Hey, let the good times roll. Rates are cheap. Let me just, my house is paid off. Let me just go ahead and get myself hocked up back in debt to play some stupid game over here. And while you probably think I'm thinking Bitcoin is the stupid game, no. I'm talking about everything else is the stupid game. And as absurd as it sounds, Bitcoin is not the stupid game. Bitcoin's the good game. As you can see, $1,000, 2,000, it's now 3,200. And it will not be stopping. It will not be slowing down. It will be going higher. As I've discussed ad nauseum. Take care.